Welcome back, welcome back, welcome back. Glad to see that you're here. You took the time to watch this video. I'm going to keep this video very, very short because I know I'm busy. I need to get back to what I'm doing. And for those who are new, I appreciate you showing up. And I have some information that I think is going to be helpful if you decide to become a professional trader. I'm glad you're here on time. Let's get started now. What I have to say is important, and I don't want to take up much of your time. I'm a busy person just like you are. Please like, subscribe, help me grow my channel. Buy me a cup of coffee. But let's get started. Now, I'm going to go to the left side of the chart. I'm going to be bouncing from the left to the right. I'm going to be explaining some things. And just full disclosure, this is a recap video. But a recap video is very, very important for your training. If you decide that you want to become a professional trader, what that mean by that is, you make your money full time from trading, or even if you're a new trader and you just want to, trade part time. There's a lot of concepts in my courses that I teach that's going to help both of you guys, or all of you guys, or anyone who decides to commit to learning and commit to trading for income. Get your daily bread. Now let's start with the higher time frame. In this example, and I trade the Nasdaq all the time. This is my primary platform or market that I trade. And these concepts, all these concepts that I teach you in all my courses, they work for every market you trade. Because trading does three things every day: it goes up, goes down, and goes sideways. I don't care what market you're trading; it always does the same thing. But the question that's very, very important is even experienced traders. Why can't we see setups coming before they happen? Hmm. Well, how can we trade the right times of the day? Hmm. Well, that's what I have in mind when I'm talking about this lesson today. But I want you guys to be focused on what the topic of this 5-part series is. And the topic of this series that I decided to make is, are you listening? Please like and subscribe if you're listening. Turn on the notification bell so you get more information. You may be new, I appreciate that. And I love all you guys who've been following me for years. I really appreciate everybody that's being connected, and all those who's graduated and moved on and they don't need me anymore. It's like a child, right? You raise up a child and away it would go, and when they're old, they shall not depart. Well, I want to give you information that you can use so you can stop depending upon getting information that I taught you. So I want you to eventually separate from my channel. I really do. So what I'm talking about today, the topic of this message today is going to be and is how to project future price moves. And if you haven't decided to stick around for this short period of video, well, bye. I wish you well. But right now, I'm going to share with you information that's going to help you. And I'm going to introduce you to the Fibonacci tool just a little bit in this video. And I'm also going to introduce you to a moving average. Or some people use the tool a value weighted moving average. They call it a VWAP. You don't have to, but sometimes it helps you as a line of defense. So here, let's get started. Sorry for the delay. I'll make this video quick. This is a must-watch video, so please make sure you watch the complete series, because there's more than one video to this trading series. Now, I'm going to open up this chart a little bigger so we can get down to the details. All right, so today's date is the 4/17/2026. It's 10:19 p.m. Like I told you before in the introduction, this is a recap video. There's some things that happened on the market open, and there's things, price action that moved throughout the day before it closed. Settlement price was here. Let me open this up some more if I can see it. Settlement price was here, there. That's already marked out somewhere else, but not for this video. But this video is projecting price movement in the market. And it's universal. I mean, it's other words, it's both sided. You can project an upward movement or you can project a downward movement. And that's going to be coming on in a different video. But for now, I'm going to put on the screen different things that I've seen today. By the way, today was a losing day for me. Ooh, I lost bad today. I had to deal with my emotions. But I'm not angry. I'm not disappointed. It's a part of trading. But let me get back to my point. Sorry to jump around, but that was just a plug for the other videos. So I'm going to put on what I marked out today by removing or showing what I'm reflecting on. There it is. So let me break this down more easy for those who are not more informed and still learning. And that's the purpose of this video. Now, I want you to realize what you see here. There's three yellow lines. There's a gray line, purple circle, and inside this line right here, and this little area here, this is the area where price gapped up really high today, and the market opened for this session. 9:30 this morning, the 17th of April, price moved to a different level. It broke the high here. I'm going to put that there because I didn't do that before. It broke that high during regular trading hours. I'm not going to tell you what that is. And then it settled down. Now let me focus on your attention. On help it remind me too. It pulled back to this breaking point, then it never returned to that level. Here it was, let's go to lunchtime. Lunchtime is 12 o'clock in most cities. Some people have lunch at 11:30, so let me start at 11:30. Right here at 11:30, price start to change. Some people call this a macro, a software algorithm, and we'll talk about that in different courses. But for now, I'm talking about projecting future price because that's very important for every trader. When you decide to make a commitment to learning how to trade, that's why you should watch all these videos in this series because I'm going to give you little pieces of nuggets at a time because I don't want to keep you, so tied down to your videos or because everybody's busy. Don't return calls, don't respond to emails because everybody got their own world to live in. Everybody has their own pressures. But guess what? In this video, we're going to talk about projecting future price. And let me show you how I came up with these projected target levels. Target 1, target 2, target 3. You'll see these projected levels here to the right of the screen. Keep in mind I'm on the 5-minute time frame and the price projections I already have set. Okay? How did I do that? Well, I'm going to share that with you right now. I'm going to share two approaches. One is more conservative and the other approach is more aggressive. And that's going to depend upon your personality. You need to decide, if you decide to become one of my students and want me to teach you more and more, I can do that. That's what I'm here for. But, watch the videos more than once if you need to. Now, let me show you what I did to get these projections. And this is the introductory of Fibonacci tools as well. And I have a whole different video on that because there's different kind of Fibonacci's. There's custom Fibonacci's based on different markets because every market moves differently and you need to adjust your Fibonacci accordingly just to give you an idea of what the market may do. But let me get back to what I'm talking about. You see the swing high? There's a swing high here. bring this out to your attention. This is a swing high. This right here is also a high, but it's a lower high. And do you see the swing low? That is very important too when you want to project price movement. Now I can go down to this swing low, and that's a deeply aggressive one, but I'm not going to do that in this video. But what I'm trying to teach you in this video, as I introduce to you different concepts that you may or may not have learned, and if you're new, please watch the entire series more than once. I'm going to keep it really short, under 30 minutes, I promise, because I know you're busy, busy, busy. So am I. Everybody's busy in this world. So here's my whole point. We're going to use a Fibonacci tool. Now, I have multiple settings that are custom settings in my Fibonacci tool. So I'm going to introduce one of them to you. Now, here's the aggressive tool. Here's the conservative tool. When you want to project price in the future in a bullish run, you take the swing high to the swing low. You use your Fibonacci tool. You can either use it on the candle's bodies or the candle's wick. And I'm going to use the wick in this case. Sometimes I like the bodies though. And there's a video on what the wicks are all about. But I take this tool and I take it to that level. And since I'm using the wick in this case, I'm using the wick there. Then I attach it there. Now, my Fibonacci tool will tell me what I'm expecting price to go to. Target 1, that's conservative. Target 2 is a little more aggressive. Target 3 is really aggressive. But how do you determine how aggressive should be? Well, that comes in a different video. Right now, I'm going to focus on projecting future price. And now you may not have this. Let me go back here because I'm going to talk about my settings in my Fibonacci right now. If I can click on that, settings. If you get a screenshot on this, you can color code any way you want to, but my screen settings for this particular projections are basically one standard deviations. But that's not always the case because, like I told you before, I have many different styles of Fibonacci tools. Each one of these are different levels and different projections of Fibonacci's, and each of them have a reason. They're just my own personal preference and reasons. You don't have to use these. You don't even ask me questions about my preference. Develop your own preference. I'm just giving you and sharing with you concepts on Fibonacci tools right now. But right now, I'm talking about projecting future price and introducing to different types of Fibonacci's. Now, this is the more conservative Fibonacci tool. Not everybody, let me blow this up. Not everybody's going to use the wicks in their Fibonacci projections. I got a video on wicks and tails. You should see that video too because it's really important. But some people like to use just the bodies of the Fibonacci and not the wicks. So that means I would need to make a decision and match the wick with the tail. So if I'm going to use body to body in my Fibonacci, stick to that concept. But if I'm going to use wick to wick in my Fibonacci, stick to that concept. Now, it's not a great amount of difference, but it is a difference. You see the projection level here? The first target projection includes the wick when I'm using body to body. But, I'm not going to go to that details because I can show you another Fibonacci that does something different. Now, step 2, projecting price movement in a bullish market. And the opposite is true in a bearish market. You're going to always want to mark out your swing highs and your swing lows, right? And then bonus, pay attention. Guess where the price moved to? The 50% level. It didn't move to the 618 or the 80% or 7.9. It didn't move there. But had it did move there, that's another video. But let me go back to another projections. The more aggressive projection of a Fibonacci move. In my prior videos on training you guys and drilling you guys to identify swing highs and swing lows, if you haven't seen that video, please go back and watch that because it's very important. And everything starts to come together as you learn one stop, one concept, one step at a time. That's why the video is going to be so short. I'm going to keep this video under 30 minutes. So please mark out another 15 minutes or less, and I'll be done with this video. And I'll come back to the other video, the other series. Now, back to where I place my Fibonacci tool. You can do it on the body of the candle. Some people prefer that. Or you can do it on the wick of the candle. Some people prefer that. It's your choice. But the key lesson to this Fibonacci tool is placing it on the swing high and the swing low. And I have a video talking about a different strategy if you want to scout through lower time frames and higher time frames, even when in a pullback. But I'm not going to talk about that now. I'm sorry for bouncing around the topics, but let me take you to the more aggressive level of price projection. The next level of progression, and depending on your personality type and what you want to do, take the Fibonacci and take it to the next swing high. In this case, I'll use the bodies. Then you'll discover my projected target number 2. I'm not going to tell you about projection target number 3, but even in projection target number 2, the high projection is a little higher than my projection, and I'll tell you why in a different video. It has to deal with dealing range. But, like I told you and promised you before, I'm going to keep this video short, and I just want to introduce you to Fibonacci tools. And there's a lot of different ways you can customize your Fibonacci. And all depends on how do you want to use it and what market you want to trade. Because every market moves differently. But at the same time, don't let this confuse you. Every market does 3 things every single day. It goes higher, lower, and it consolidates. But some move at a higher pace or a slower pace than other markets. So you can customize your Fibonacci tool to any market you might want to trade. That's why I have so many different Fibonacci tools. Because if I get into a different market, I might want to measure that move or daily average differently. So, thank you for your time. I kept this under 30 minutes. Please watch all 5 of these videos in this series on projecting price in the future or future price projection, however you want to label it. But I just want to make sure you understand what I'm talking about. Love ya, love ya, love ya. Top Down Traders, Kevin Garrett out. Oh, by the way, if you haven't hit like, subscribe, please do. Help my channel grow. I appreciate it. YouTube got rules, but I don't really care about everybody's rules because I'm going to make my own way prosperous by studying the market, staying in the market, getting out of the market at the right time, and try to help other people as I grow. So, please like, please subscribe. Buy me a cup of coffee if you learned something new. I greatly appreciate your support. Tune in for the next episode. Again, this is a 5-part series. I'll talk about Fibonacci's and, setting those up in the other series. But right now, I just want to introduce you to projecting future price. Bye for now. Please like and subscribe. Support the channel. Bye-bye.